Hello everybody, it's Saturday again, so it's another episode in the ICT series, and today I'm going to cover order blocks, okay? So order blocks are probably one of the first things you unravel when you get to studying ICT, apart from fair value caps, right? So today I want the idea to be that you walk away from this episode knowing absolutely everything about order blocks, what you need to know, how to trade with them, how to manage risk, etc., and what to spot the best order blocks, okay? So let's get straight into it. Right, what is an order block? An order block, put incredibly simply, is the last down closed candle on a bullish move, or the last up closed candle on a bearish move. So if we look at this chart here, which has been imported, we can see that this is the last up close candle before a leg down. We also have another up close candle before a leg down, and then on the bullish side we have the last down close candle before a leg up, the last down close candle before a leg up, the last down close candle before a leg up. So we will cover this in more detail on how to use the trade in a second, but that as a visual is how you spot order blocks, right? So what are they in slightly more detail? They are a PD array, which means price will reach for them, okay, on all time frames. They are a PD array, which means price will reach for them. They're used as a reference point to take entries from and manage risk, so we will cover that shortly on the next couple of slides. They're used to frame sentiment in current price action by seeing how price reacts to them, okay, so we can see what the market is likely to do by how it reacts around order blocks, okay. And then lastly, to note that time is fractal, so they appear on all time frames, right, yearly, monthly, daily, hourly, 15 minute, 5 minute, 1 minute, etc., right, you get the picture, it's all time frames. But for me, when is the best time to use them? And this is the key, okay? So for me, the best time to use an order block, whether it's bearish or bullish, is when recent buy-side or sell-side liquidity has been taken and price is showing a willingness to move in the opposite direction. So what do I mean by that? If you have a swing high, you have buy-side sat above it, right? So you have a liquidity pool sat above that swing high. If you see that purged and price is then showing a willingness to move in the opposite direction, that is when you'd be looking for bearish order blocks. The same is true on sell side. So if you have a swing low and liquidity below that swing low has been purged, you are then looking for bullish order blocks. Okay, so we will cover this in charts very, very briefly, but I just wanted to cover it in this slide so you guys had that as a reference point. Okay, so this is a bullish order block, a bearish order block. Okay, this is a bearish order block. So this is the last up close candle before you'd likely see price move down, and this is a bullish order block. Okay, it's the last down close candle before you would see a leg higher. Okay, now I just want to cover this before we move forward, and this is what I was discussing earlier when I was mentioning how to manage risk in a trade by using an order block, okay? So you have medium threshold, which is the equilibrium point of the order block. You also have the body, okay? And this is a typo, which I've just noticed, right? So this is the bottom of this body, right? And it's the open of this candle. So we'd be expecting price to move down, okay? And that's a sensitive part of the bearish order block, right? And this is the most sensitive part. So when price moves away and comes back, the most sensitive part is the wick. The medium, right, is this. So when I say medium, I mean like the medium amount of risk is this point, and the medium threshold is this point. So from managing risk, this is the lowest position to get in, which is managing your risk, right? Because your stop would be on the other side of this order block, okay? So if you got in here, you would have a much tighter stop. So your risk is lower when entering the trade. However, it is slightly higher risk as a trade because price has moved deeper into the order block, so it has a greater chance of running through. But, like I said, it's less risk from you as a trader because your stop loss is closer. For me, I like to place my entries off the body, right? And this allows me to place my stop loss, get the benefit of both worlds, right? Price usually runs into the body, and I can put my stop above the top of the order block. And the most sensitive part is obviously this wick. So if you place your entry on this wick, that is your best chance of getting into the trade, but just be aware that obviously you have higher risk, okay? And the opposite is true for a bullish order block. So with this bullish order block, you would be expecting price to move higher. So price is likely to return to the most sensitive part of the wick and retrace higher and show signs of continuation higher, okay? The top of the body, okay, which in this instance is the apologies, which is the open of this candle, right? Price is likely to hit this and move higher. And then you have the median threshold. So price can move into the median threshold of an order block. So again, if you were to place your entry here, you would have the tightest stop loss, but you'd have the highest risk in terms of the trade because it's got more likelihood of blowing through. You've also got less chance of getting into the trade because, if the trade is very, very strong, it's likely just to hit either the most sensitive part or the body and move higher. But it all depends on what your trading style is. So that is it's good to be aware of how to place your entries using an order block dependent on your amount of risk you're prepared to take. So if you have a huge candle, you might want to consider waiting for it to return into medium threshold so you can have a tighter stop. You may miss the trade, but again, this all comes down to how you manage risk. But I just wanted to break down how an order block sensitivity works and how price can move back into it and trade away from. Alright, so Now we've done that, let's have a quick look at the charts so you guys can see that in slightly more detail. So you can see here we have both bearish and bullish order blocks. So we have an order block here, it's the last up close candle before a leg lower. We also have an order block here, the last up close candle before a leg lower, and then down this side we have the bullish order blocks, right? So we have the last down close candle before a leg higher, we have the last down close candle before a leg higher, and we have the last down close candle before a leg higher, okay? So how I use them, and this is what we were just discussing, is by seeing either sell side or buy side recently being purged and then looking for an order block to form to take a trade off, okay? Sounds a little bit complicated, but bear with me. So look, if we look at this swing low, we have sell side below it. And on this candle, we purge the sell side. So what are we looking for? We're looking for price to retrace into a premium of this displacement leg, okay, before we want to be looking for order blocks for continuation lower, right? So, purge of the sell side, price moves higher, we then see price move lower. This is a very strong order block, okay? So what would we do? We draw this line, and I personally, as I mentioned, draw it off the body and want price to return into the body of the order block, okay? So your entry would be as soon as it hit the body with your stop just above. In this instance, price doesn't quite reach medium threshold. You could if you had just taken it straight off the bat here, but that would have been a higher risk, right? You could wait for it to return back up into the body of the order block before showing signs of continuation down. We also have another order block here, right? So you'd be aware of them, right? Now, when we get down here, we're then looking for signs of why price would have reached to here. So if we're taking this trade up here, we'd be looking for price to reach a PD array down here, which in this instance was an implied range move, right? But if you're looking for signs of reversal, you're then looking for bullish movement, bullish order blocks to take trades off in the opposite direction, okay? So we can see here that we have a bullish order block, the last down close candle before a move higher, and we can see that price returns back down into medium threshold of this order block, okay? Price moves higher, forms equal highs, and returns back into that order block. So if you believe that we had hit a PD array down here, so we had hit the low and we were likely to show signs of reversal, you'd be taking trades off this order block, okay? Or if you wanted to wait and find a better risk entry, you can wait to see if price was showing continuation after we had a break of market structure. So this, a break of this buy side, once it broke, would be a break of market structure, okay? So price then returns and forms an order block. This order block, last down close candle before a leg higher. What did we say was the most sensitive part of an order block? The top of the wick. Price returns, hits the top of the wick, and moves higher, okay? If you had your entry off the middle of the body, you would have missed your entry. Okay, it happens. So what could you have done? You could have waited for a pullback and taken an entry higher if you believed price still had room to move. In this instance, you would have been targeting the equal highs which were set here, right? So you could have waited for a pullback into this order block and taken it off the body of this bullish order block, okay? And then price moves higher. You can see we then form another order block, price moves into it, this takes medium threshold before the move higher, okay? So I hope that breaks down order blocks and gives you everything you need to know, and how to use them and how to take to frame the best and strongest order blocks, and that is again after we have a purge of either sell side or buy side, right? So if you have any questions, please drop them in the comments, and until next time, trade safe, and I'll catch you soon. Cheers, bye.